Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the weekly recap of the week ending December 29th, 2017. Also a recap of 2017 as a whole in the commodity market. Fairly quiet in commodities as a whole in 2017. CRB index, which is a good measurement of the commodity mix, was up basically 1 point or less than 1% for the entire year. Now, specifically looking at a few different commodities, a year ago, last trading day, corn traded $3.51. Today, basically the same price. So corn's more or less unchanged versus a year ago at this time. Soybeans are down right around 45 cents, or about 4.5% on the year. Wheat up about 16 cents on the year, 409 to 425 last trading day this year, up just shy of 4%. Bean products, meal slightly higher, oil slightly lower. Livestock, cattle market, basically about $1 higher than a year ago, so about 1% or a little less than 1% higher. Feeder cattle up nearly $12 from a year ago, about 9%. Hog market also up about $4+ versus a year ago, about 6.5%. So some of the ag commodities, especially the livestock, an okay year. The big mover and shakers to the upside in the last 12 months, obviously crude oil, which ended the year on kind of a high note above $60. First time crude is closed above $60 in about 2.5 years. Gold market was higher about 10%. Some of the soft commodities such as sugar were down sharply. Sugar was down almost 25%. But industrial metals such as copper was up 30% over this last year. Now, as I mentioned earlier, commodities as a whole maybe up a little less than 1% on the year. This is a comparison to the S&P or the stock market, up over 20% for 2017. A good year for retirement accounts and the investors as far as the stock market's concerned. Now, the one other point I guess I would bring up as far as the big picture commodities, U.S. dollar index a year ago closed at 102.40. This year we're going to be down at about 92.5, so off almost 10 points, or about a little over 10% on the U.S. dollar index, which typically longer term could mean better commodities down the road with cheaper products, cheaper dollar values for the foreign investor or the foreign buyer of our products. We'll see if that gives us any leverage going forward. But again, the nuggets out there are the energy market being stronger, copper market, industrial metals being stronger, and the dollar being lower. So obviously, as the Fed talks about raising rates, that could or should in a textbook say that the dollar should see some strength. But on the other side of the coin, with energies and some of the precious metals, the industrial metals a little lot higher, is there some inflationary tone in this market going forward, and thus being a little positive commodities into 2018 to be determined. Now, keep in mind, in early January, on the 12th of January, we get a supply and demand update on all the grains and final production number along with stocks. Personally, I think the numbers to watch that have the most significance could be the stocks number. As we talk about different commodities for 2017 going into 2018, the one thing that we have to keep in mind is the stocks on all these grains is high, and corn and beans especially. We're probably going to be starting the year with the stocks number we haven't seen in quite some time. In the case of corn, as far as raw stocks, probably the biggest of all time. Maybe not from a stocks to use ratio, but the biggest of all time. So the demand sector is going to be key as we get into early 18, especially exports in the early quarter or first 2 quarters of 18. With the cheaper dollar, and to take away some of this slack. But keep in mind, there's still lots and lots of inventory in the country. I think that will be reflected on the stocks report. And as far as the grains are concerned, especially corn, any type of uptick or rallies in the futures market will somewhat be offset by a basis that will back off because of the supply in the cash market. Those of you in some of the processor markets close to ethanol areas, there's not a lot of cash carry in this corn market currently from now till March, which is an indication or a thing the market's saying it needs bushels today, not tomorrow. If you're closer to the river market or export market, St. Louis is an example, there's 20 plus cents of cash carry in the corn market from now till March. That's a market that's saying it doesn't need corn today, it might need it tomorrow. So beans to some degree are a little similar. So those of you with hedges in place, continue to watch for that basis to improve. And also on the new crop, watch the values. And when I say new crop, the 18 crop, watch those values in those December futures and November futures as far as beans are concerned. Decent on the corn, if there's values that are worth locking in. Keep in mind, December corn last summer traded above $4, I believe, 12 days. We're not terribly far away from $4 if the right thing occurred, within 20 cents. So, may not hurt to have some offers in that in case we see some uptick. But all in all, fairly quiet week as we wind down the year. Fairly quiet month as far as the commodities were as a whole, at least in the ag sector, especially the grains. And as a general rule, as I mentioned, the CRB index, not a lot of changes during the year of 2017. So we'll see if the investment community has different thoughts going into 18, and if anything major changes in the supply sector and or the demand sector obviously can have some impact in these prices. We'd like to wish all of our customers and listeners out there a very happy and prosperous 2018. If you have any questions, call us at BIS Commodities. Phone number is 800-373-2525. With that, have a wonderful and happy new year.